Okay, and we are live. So hello once again, and welcome to another Red Cloud webinar. My name is Kobe Kushner. I'm a mining analyst here at Red Cloud, and today we are joined by Mr. Peter Ball, president of Noram Lithium. Peter's worked his entire career in mining, started off in the field in a mining engineering capacity, and has since worked in all levels of leadership in the industry. He's passionate about what he does, and he's passionate about the company that he works for. So before we dive into Noram, I'll give a little introduction here, and it'll be brief because I think most people on this call are well aware of what lithium is and what's been going on, and how demand from end users, particularly EV makers, have pushed lithium prices to record highs in a very, very short period of time. Supply continues to be incredibly tight. The International Energy Agency put out a report last month stating that we'll need 50 more average-sized lithium mines by 2030 just to meet global carbon emission goals. Benchmark Mineral Intelligence similarly says that we'll need over 70 mines to meet 2035 demand. Building a new mine takes time. While there's a lot of new entrants in the lithium space, there's really not that many that already have a sizable resource base that's already been defined, and there's even less that have demonstrated economic viability through a PEA or higher. And this is why countries, including the USA, have put lithium on its list of critical minerals. Now, the US is where Noram is focused, specifically in Nevada, and we might recognize Nevada for its precious metal potential, but it's also an emerging battery hub. It's home to Tesla's famous Gigafactory, and it's also home to Albemarle's Silver Peak lithium brine operation, which is currently the only source of domestic lithium production in the USA. And as Peter will show you, Noram's Zeus Project is located immediately next door. So during today's webinar, Peter is going to provide us with an overview and an outlook, and when he's done the presentation, we'll move on to the Q&A portion. A reminder that you could type your questions into the comment box at any time, but as always, we have to first run through the fine print. So during this webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of the company's corporate deck, which we will see in a moment. And for Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located at the Red Cloud website for specific disclosures on Noram Lithium. And with that, I will now turn it over to you, Peter.
Thanks, Kobe. Let's get the presentation up here. Perfect. So thanks, everybody. Thanks for the good introduction, Kobe. Thanks, everybody, for taking time at their lunch in Toronto or their breakfast in Vancouver. I'm actually in Toronto, sitting in a hotel, so hopefully the internet does not lag. Yeah, Noram, I'm actually in Toronto. We're about to start probably one of our most kind of aggressive marketing and storytelling campaigns as we push forward to probably two of the biggest catalysts that we see Noram releasing in the next quarter, so September through December. Just a little bit of background myself. This is an interesting story. I joined this company just about a year ago, December 2021. And when I was given a call, just in case anybody doesn't know this spiel from how I joined the company, I never heard of Noram, never heard of the management team, looked at the story, looked at what they've done, looked at their track record, looked what they've been able to accomplish. And a few points about this company before I dive into the slides is this is a company that is extremely well structured, well cashed up. And for the first time in some of the companies I've worked for, we have a team that's been here since day one, since 2016, when they staked the project. They drilled off every single hole in the project. They raised all the money themselves. They've kept their shares. So one of the most interesting dedicated teams that I've seen, and really kind of gave me an interest to join this team and this company and help them in any way that I can. And I'll talk about a little bit about myself in one of the slides. So a unique story. Great structure, and one of the hottest sectors that we've seen in the last decade, and probably what's going to happen over the next couple of decades. I'm going to have a couple of slides on lithium, but again, most people on the call probably have a better idea. I've been following lithium longer than I have. So lots of forward-looking statements. Read this. I'm going to say a number of things that's going to talk about the future of the company, where we're going. So read this and use it as I go through this story. So just a little quick facts of what the market look like in 2020, what we're going to see in 2028. The compound annual growth rate of lithium is just, it's going to the moon, 23% over each year. Per year, growing from 75 to 193. It's beautiful, and it's a lovely little two-letter word, lithium. So again, this is showing what's currently happened over the last couple years, and really what will happen in the deficit. And really, there's a lot of mines coming on board very quickly, but really they're not going to be able to keep up with the need and the demand in the EV space, and what for example Elon likes to say, and a number of other car makers, BMW, Ford, GM, everybody getting into the space, and we're seeing more and more electric vehicles every day populate the landscape and the highways as we drive to work each and every day. And again, here's some significant adoption and investment and reaction by the governments in North America from the $42 billion that's needed to be invested in this market, and to even meet the demand and of what's happening in this sector in the EV space with lithium, cobalt, copper, etc. With the Canadian government actually announcing in April a couple $2 billion going into the EV space, Biden invoking the Defense Production Act, and the critical mineral. There's really only one mine sitting right next door to Noram that produces lithium in the United States, and that's Albemarle Silver Peak. So we'll talk about that and where we sit, and really the investments to space. And a comment from Macquarie that it's a perpetual deficit. We'll see what happens, but the market's changing. Speaking of changing, last year, this is some interesting that I kind of stole from where I saw it on the internet. Some investments that was made in South America on a number of companies. And this is more South American based, but really, it's the scramble, as the title says, of who can acquire, merge, consolidate, and take advantage and be in control of this lithium space as we go forward. And I have a little note. What's going to happen in the U.S.? There's multiple companies that are all advancing strategic assets, and I think Noram's one of the leaders in the amount of resources we have, the grade we have, the location, and the stage we're at. I think everybody kind of probably understands these three different types of lithium products: sedimentary, which we have, the brines from more South America, and some of these spodumene hard rock stuff from the U.S., but really from Canada, and some of the the costs to get it to mine the product, the typical grades of what we're seeing, and type of circuits and metallurgy, and kind of an advantage if you look at Noram's project, or mostly sedimentary. There's really no overburden, like a little thin veneer. You dig it out, you scoop it. There's no blasting, there's no tunnels, there's no shafts to get it out, there's no piping down. It's just you dig it out and scoop it like a bunch of clay. And it's really interesting seeing what our neighbors are doing in Nevada in the metallurgical extraction technology, and it's kind of good, like I was just mentioning to Kobe before the call, that it's good to see some of these companies spending a couple $100 million understanding the technology to extract lithium from the clays. So are we a year behind by some of these people? Yeah, but again, we're catching up quickly by learning what they're doing on the metallurgical side, and we're not burning our treasury. We're keeping a very strong treasury. So let's dive in really quickly. It'll take it's not a very long presentation. It's a very simple story. Of course, we're in Nevada, the #1 location in the planet that has been ranked in the top 3, I think, for nearly a decade by the Fraser Institute. So wonderful place to work. Incredible infrastructure. If you look where we are, we're right on the side of a paved highway with a power line running right through the middle of our project, sitting right next to the only lithium producer in the United States. I could throw it with a slingshot, I could hit their plant. We're going to talk about some metrics. So here's Zeus. This is at 14,250 tons per lithium carbonate equivalent, or LCE. We have a lot of tons. I'm going to talk about what we have and where we expect to take that over the next couple of months with what the work we've done this year. Treasury is probably closer to probably 16 or 15 and a half now. We're starting to utilize some of the funds that was raised earlier this year. I'll talk about that in a second. And like I mentioned, this is probably the biggest period. We're about to start, some marketing road shows and getting some people to get our story out to the market. And so we got a resource update coming. We'll talk about that. Really, we completed a multi-hole drill program to upgrade some of the inferred to the indicated and measured, because in the PFS or pre-feasibility, to get proven and probable, you need measured and indicated. The inferred falls out. So we've done a lot of work, and we're quite optimistic of what that will yield. We're fully funded. So I'm going to talk about the treasury again on another page, and how much money we have and where we expect that to take us. Again, this is another interesting company. I'm going to talk about the management team and their shareholdings, and they've each mostly pretty much held their shares since day one. So we as a management team control about 12% of the company. I'll talk about a new shareholder that was brought in, talk about the share structure. And we got a good team, and we're expanding our team. Just added a new person in Europe last couple of weeks ago. Really a smart guy that will be opening, smart professional will be opening a lot of doors in Europe and in other parts of the world for us. So big year last year, big year coming up. I'll talk about really what happened last year. This slide's getting dated, but it's always good to see where you came from. Last year was good. We did the PEA, beautiful, robust economics, which I'll talk about a couple of slides from now. We had a gentleman named Adam Falkoff. To join the board. I'll talk about him in a minute. The company completed the 5th resource model back in September, about a year ago today. And we had some changes in the management team. And really the only financing that was ever done in the company was last year. Otherwise, they put the money together themselves to keep the structure tight to ensure they didn't dilute the company. And it was taken by one individual, Don Ross, from Lee Jones Gable last year at 62 cents. So today we're trading at about 50. We'll be trading a little bit less, which is an interesting opportunity than the recent strategic investor came into our story. So I've mentioned most of this. We're trading about 50, market cap 45 to 50. Our enterprise value is about 28 to 32 million Canadian. So say 22 million US dollars enterprise value. So we'll look at what we're getting paid in the market and what our peers are getting paid in the market for every ton of lithium carbonate they have. I've mentioned the insider holdings. We're kind of, if you put our graph versus most of the other peers in the industry, we're all kind of coming down from what's happening in the market. But the good thing, of having 16 million, 15.5 million in our treasury is we can fight these markets. We can get through them. We can continue to execute our plan, de-risk the asset, and re-rate the company. So we're not going to dilute the company in any shape or form. Quick recap to second quarter. Part of my goal when I was joined is to try to find a strategic investor to really help the company get all the way to the definitive feasibility study, or the bankable, whatever you want to call it. So we did a little bit of marketing and really out of a text to a colleague that I've done and raised some money before over at Waratock Capital Advisors, which is a multi-billion-dollar fund that's investing in all spaces, but has a significant interest and ownership in pretty much all the lithium companies through Lithium Royalty Corp, through their royalties, and also through strategic holdings. We were able to do an 82.5 cent financing at a premium to the market and with no warrant. So we saved the finder's fees. We had no commission, and really put our structure in the place you want to be as an investor when you're looking at companies, not to have this big warrant overhang. Quick run through the management team. And mostly been behind the scenes most of their careers, either in building public companies or being an investor, investment advisor such as Sandy. So Anita, she's really good on the corporate governance and being our CFO, and really good on the diversity of the board. She's been here mostly side by side Sandy when Sandy is the founder and CEO of the company. He has financed the company. He was there since day one. He is an extremely passionate individual who wants nothing but this company to reach its ultimate goal of rewarding all the shareholders he and the management team and board has put into company. If anybody doesn't know me, I've been in the industry. I'm 55, in the industry since the late 80s, kind of a fifth generation mining kid. Did the engineering stint at the RBC, raised a bunch of money in the sector over the last few years, and really I just like telling the stories with good companies and seeing what we can do. So at the end of the presentations, my cell phone and email, give me a call at any time to learn a little bit more about myself. Brad's an interesting individual. He's been here since day one. He actually staked the project, drilled every single hole, did all the 5 resource updates. So again, been here since day one. Anita controls a couple, 2.5 million shares. Sandy, about 1.5 million shares. I bought into the market at much higher prices for about $250,000 worth of it, probably in the 90s and 80s. So I'm underwater, but I believe in the story, so I see where it's going to be going. Simon's the latest addition to the team, and again, being in the industry for 15 years and speaks, multiple languages. He's from and based in Switzerland. He's going to really be a key team member to help us with his energy, and his a little bit younger than half of us, in his late 30s, I think maybe up to 40 now by this time, helping us over there. Art and Cyrus have been here since day one. Art's got about 1 million shares, Cyrus about 1.5 million. Junior companies, partners in accounting companies. So great management team. And Adam, the last person on the management team, or board, sorry, he's like one of the most respected and connected individuals in the United States, and with the president of the Rare Earth Association and other items. It's a great individual to help us get through the permitting and plan of operations and as we push forward. Okay, let's get into the asset. I've mentioned a lot of this stuff. Clayton Valley, Nevada, halfway between Reno and Las Vegas, extensive infrastructure, power, paved roads right next to the property and through the property, next to Albemarle. A nice sized project. Picture the deposits, 3 kilometers long, kilometer or so wide, heading northwest, southeast, 100, 200 meters thick, right from surface. Lithium grades and the green stuff sitting right at surface. 82 holes completed. I'm going to make a note here at the end of the presentation. I actually just pulled this up on my cell phone as what I was putting together. If you looked at some of our projects compared to some of the other companies that have been drilling off projects, we've completed 100% or 100% more holes, and really an understanding, and have, we believe, an exceptional confidence level in our project. So for example, I believe Cypress next door has done about 33 on their project immediately next door. American Lithium 29, Spearmint 18, Brad Ahead 10, and Arizona Lithium 37. So Noram over the years have done an exceptional amount of work. So it's interesting what we have and the density of drilling. Metallurgy, I've mentioned that we've done some preliminary stuff. We continue to evaluate our clays, but really interesting when you watch what our neighbors doing at Cypress. They've done some great work. And again, when it's the same dirt or the same rock and clay that they're doing, it'll be a really strong advantage to Noram as we push forward. Again, I've mentioned most of this on this slide. Halfway between Vegas and Reno, there's Albemarle sitting in the middle. Actually, I got to turn this on right here. There's Albemarle. And we're sitting right here this is where Cypress is. So it's good to have a neighbor. And again, there's Spearmint and Acme and a whole bunch of other players, all where the brines leached in through the clays and kind of put the lithium in the clays right next door to them. So let's clear this up, go to the next slide. Getting used to this mechanism on this control board. So this is last year. We're about to change this spreadsheet on the right-hand side. Pay close attention, I think, over the next 2 to 4 weeks when the technical people have signed off on the latest resource update. We completed 12 holes, beautiful grades, exactly what we wanted to see in every single hole, half of them again ending in mineralization. And what we're doing is we're taking this 363 and we're going to increase it. And I think we're going to probably do quite well on that. And we're trying to see what kind of grade we'll get out of it. And again, we're going to take some of this 827 and bring it up into the measured and indicated, because again, we're going to be pushing even more aggressively to get the PFS done on the project. So a lot of work, again, 82 holes compared to some of the other groups in Nevada and Arizona. High grade core, this is the grade where you're seeing up to 3,000 ppm in that little pink red area of it. And again, on the right hand side, measured, indicated, and inferred. Inferred is the blue, and really we've been populating some holes, as you can see on my dots, really taking some of this blue stuff, shoving it into the brown, which is inferred, into indicated, pushing together that higher grade core for the mine plan as we push forward. So this is an interesting number. The long-term forecast, according to the people that are a lot smarter than me and what they believe the price will be for the next 10 years, is 17,000 to 21. Might have changed yesterday or tomorrow, but that's the last number that I was given. So this number, which is the highest number we happen to have in our PEA at 14,250, gives a pretty robust economics of the project. Again, great numbers. They're fluffy because we're 4.5 years away from potential production if this project, when this project gets to that level. We originally did this model at 9,500, which I'll show. So, if this project gets into production by 2026, we'll have a good 4 or 5 years to reap the 17 through 21, and the payback and the internal rate of return and NPV will go through the roof. So, incredible numbers, but yet to be seen as we polish off with PFS. This is interesting. People, sometimes ask how far behind are we from Cypress. Cypress, we're about a year. They completed their PFS just over a year ago. We're going to have ours. But when we did our PEA, we said, let's do apples to apples. And again, in no shape or form are we saying we have faster payback or this, but really it's the same deposit cut in half with really the same metrics, even though I guess our metrics kind of look a little better. And in the cap cost here, 124 million of this capex is just contingency. So great mine life, great numbers. Operating costs I'll show in a second of how we relate to the other companies. And we're trading at a significant discount to market cap. This is again just some high level project designed assumptions, really with no strip ratio, 0.07 to 1. Same project, and really, as if you look at Cypress, if their pit was extended, we're basically right here. This is their bot. They actually purchased this little square here from a company, Entertopia, to expand their pit, I believe, a little bit. But yeah, it's basically side-by-side project. Again, this is just showing we use 9,500. How do we compare to a few of these other groups they're pushing forward projects? And then operating costs 33, we're pretty much the lower of everybody on the op cost. Our market cap is exceptionally low. Our market cap per NPV, really, if I put the 2.67 billion here, we're trading at less than 0.3% of it. And you can see what others are trading in their multiples as they advance their project, which we're doing. So I see a significant opportunity for Noram to reach that stage at a better market cap per NPV. This little green bar should be probably over on the left-hand side, but really shows as we finish off the PFS, even if we increase the OPEX cost by 20 or 30%, we're still probably going to be below pretty much everybody of this cost curve that I stole from Canaccord that was developed a couple of years ago and what's happening in 2025. Getting close to the end here, so just a couple little metrics for fun. This is our 1.78 that I highlighted before. We completed a drill program of 12 holes, and our goal was to increase this measured and indicated and take some of this, this 3.89 and push it up. So we believe conservatively that we probably be between, probably here to here, 4 to 5, and if we can upgrade the inferred to give us 4 to 5 million tons of measured and indicated, it's exceptional. And if we can keep the grade as good or better than our peers, we'll have probably one of the largest assets, largest resources, with probably one of the potentially best grades in the United States. So again, stay tuned for that. I think it'll be really interesting to see what we come out with. And again, it's 2 to 4 weeks away, but it's exciting to get to these milestones. And again, we've been promising this all year, and we're right on track. Market cap, this is 45 million. Enterprise value 28. It's good to be here. I mean, because there's only one way which we can head. And again, our goal is to continue to de-risk and re-rate, and based on valuation per ton of resource or per share, cash balance. I think this is going to be a year that we're going to probably have a very positive re-rate to catch up to the people who have maybe less tons, less grade, worse structure, and in a wrong, maybe not more of a good a place as Nevada. And I think I got one more slide here. Yeah, I did this one up for fun the other day, and I was trying to see what, if you take everyone's resource and you kind of divide it, how much they're getting paid per ton of their resource. You can see that, let's look at Brad Ahead, for example. They're getting paid $84 per ton. They have about 400 million shares out. They only have about 300,000 tons of LCE. They've got some good opportunity for expansion. Do not have a resource really, and do not have a economic study, but they're getting paid $84. Noram, I'll go all the way to the bottom right, is about 4. So again, as the market, and we keep telling these stories, and every time I do a presentation like I did yesterday in Toronto, 3/4 of people have never heard of the story. So it's time to get the message out, time to complete these final catalysts, which are the resource update and the PFS by the end of the year, and kind of really change the metrics of how the valuations are done on Noram. We're fully cashed up. We're good to probably 2024. We'll probably have 13 to 14 million-ish by the end of the year in our bank. On December 31st, we would have completed the PFS. We would have announced the 6th resource update, and we'll be ready for probably one of the biggest years. And we see this market, getting stronger, and we're all starting to understand it a bit, because it's one of the most robust, perfect storms that I've ever seen in my 35-year career. Last thing here, I've mentioned the quick key facts. I'm not going to talk about them. Next steps, which is the drilling of the holes, which we've done, converting of the tons, which we've done, but we just haven't announced a report because it's not completed yet. So we're continuing to do metallurgical studies through ABH Engineering, Brent Heschler in Vancouver, great team, and they're really making some good headway, watching what other companies do, and complete our PFS, which again, these bullets have been in the slide presentation for the last 6 months, so we haven't changed it, and we're on track, and we've completed our goals. And of course, starting the plan of operations, baseline engineering, and social environmental baseline studies, just to ensure we're on track to get to the DFS, which we're fully funded to. And like I mentioned earlier, there's my cell phone. You can text me, phone me, or give me a call. Everybody on the call today, everyone knows I pretty much get back to them within an hour if I'm not in a call or a meeting or traveling. So again, thanks to everybody. I'm going to throw the control back to Kobe, and I really appreciate everyone's time today.
Great. So thank you, Peter, for another very informative presentation. And as you alluded to, we'll now start with the Q&A portion of the webinar. Reminder to everyone on the line that you could type your questions into the chat box whenever. So, Peter, your company is well financed. You mentioned you have, 15-16 million in the bank. So
yep.
One thing investors are cautious about is share dilution, especially in this type of market. So, just remind us how far out are we until you will eventually need to return to the market for your next raise?
Well, if we look forward from our PFS is going to cost us about 700, and so we'll pay that off. So like the year-end balance will be, let's call it 13 million to 14 million, depending where it slides. So if we go forward and start doing some pilot plant studies and push forward for the engineering and plan of ops, I would not think in any shape or form we would need to go back to markets until at least the end of next year or the Q1 of 2024 at the earliest. I can't see any reason. We have a low burn rate, and we're watching the cash tightly. You have to in this market.
Mm-hmm. Yeah, no, it was definitely good timing. You raised money when markets were good, and because now it's obviously a lot tougher.
Yeah.
I guess the elephant in the room is that this is a clay project, and there's still a lot of skepticism on clays, despite what companies like Bacanora and even your next door neighbor are doing. So in your view, what is the biggest risk when it comes to commercializing a clay operation? Obviously, metallurgy comes to mind with most people, Do you think it's metallurgy, or do you think it's something else?
No, I mean, I think right now everybody's, Lithium America's at the Thatcher Project, which is going in through their final commissioning and construction phases, trying to understand their metallurgical process. And, really interesting seeing, so I think it's metallurgy for sure. And the good thing, historically, metallurgy is always figured out. There's about a bunch of smart people in this industry, and watching what Cyprus is doing, it's interesting because if we say, well, Thatcher's going to figure it out, but I mean, Thatcher's dirt. Lithium America's dirt, or Ioneer's dirt, I call it, is different than our dirt. Interesting enough, Cyprus right next door, their dirt or their lithium clay project, sedimentary project, it's the exact same one because I keep saying we're cut in half and they got half and we got the other half. So the work they do is extremely important to how we'll be eventually doing our process. So they're spending a lot of money, which is great. They're doing a lot of great work, and it's a huge advantage to Noram. So I think it's metallurgy. It's usually metallurgy. That's pretty much my comment on that.
Okay, and speaking of metallurgy and what Cyprus is doing, so as you explained, Noram and Cyprus are essentially looking at two different parts of the same deposit, same dirt. So it's no surprise that the economics are very similar between the two. But meanwhile, here Cyprus is trading at 4 times the market cap. They've been posting positive results from the pilot plant. So I'm curious, how far ahead is Cyprus in terms of project development than Noram, in terms of timeline?
Yeah, well, some of the things you'd want to look at are what have they done that we haven't. They've completed a PFS. We're just about done. They're working on their DFS. So the initial gut answer is they're about a year ahead of us. But when you see a company completing their metallurgical studies and getting potential handle on it, we're catching up as they do their work. I mean, we're catching up. So I would say a year, but now I'd say 9 months, and in about 2 months we'll have a PFS. I'll have a PFS. We've got 15, 16 million. They've got 25. Our share structure is 89 out there, 150, 160. We got no warrants. They got a bunch. I think it's re-rate time for us. Yeah, they're trading at 5 times the market cap. I think, and you got to also look. I mean, they've done 37 holes on their project. We've done 82. Do we have a better understanding of the deposit? I'm not sure about that, but we've done a lot of work. Maybe they're going to have to drill another 40 holes to catch up to we are. If you look at their resource, I don't think they have a single ton of measured, and we're hoping to get some measured in ours. So a year behind, but we've got all the funds to get it all the way, right?
Right. So, speaking of drilling and measured and indicated and inferred resources, so you recently wrapped up a drill program and you hit some of your best intersections to date. So This program will feed into the upcoming resource, of course. And can you give us any hints as to how your resource might change? Will it get bigger? Will you have higher grade tons here? Or is it more just infill and increasing the confidence?
Definitely infill, because of course we increased the density. But some of the holes we drilled, as you just mentioned, were the best holes that we've ever drilled in the history of the company. Mm-hmm. So I think that you're going to see the grade, I think, go up a little bit. And every ppm is significant in the economics of it. And I think, of course, the goal was to take, we have 800 and some million tons of this inferred stuff. Definitely inferred's going down, and definitely measured and indicated is going to climb. And how many tons we get out of that? I think hopefully if we do what we've planned and the numbers come out right, we're going to be right side by side, or maybe even ahead of some of these people in the size of the measured and indicated resource, which is the key resource part as we go into the PFS and the DFS. Mm-hmm. Excuse me.
So, and how will the PEA assumptions differ from the PFS? Do you know? Are you planning on using of course, there's inflation, but prices have also shot up since you've completed your PEA. So, are you going to be using the same price? Any hints as to your assumption or how the PFS might differ?
Definitely. A lot of the assumptions on the dollar and the capital requirements and the cost would definitely go up. And like I mentioned earlier, even if we increase everything across the board, these are very high level, comments, by 20%, our OPEX is still going to come well below probably the industry average. Even on the left side of that graph that I had
Right.
halfway through the presentation compared to ourselves in the OPEX curve for 2025. So it's definitely going to go up. It has to go up. The market's changed. Inflation's gone up. Dollar's getting a little weak today at 73 and change. So, and it'll be interesting. Again, we'll find out in November, December, January, probably at the very latest, but November, December is the goal.
Okay. And you mentioned, we have some questions here on
yeah, I see some
timeline on a sale. And I'm going to try and combine that with another question here. So you mentioned that Cyprus bought Enertopia, and that's a little sliver of land between Noram and Cyprus. And I imagine that there would be a lot of synergies if Zeus and Cyprus were mined together as one large mine instead of two smaller mines. So has Cyprus shown any interest, and are you ready to sell? And when would you be ready to sell?
Well, that's always a question for the board of directors and the shareholders of Noram. But when you're trading at 50 cents, 32.5 cents below the last strategic investment made by Waratah at 82.5 without a warrant. I mean, their cost is 82.5. They don't get any discount with a warrant. We're just coming up with two of our biggest catalysts. Do groups such as Cyprus or others continue to reach out and want to chat? I think you have to look at what we have. If we combined it with Cyprus, it would probably be one of the probably the world-class lithium assets in the United States or globally. But it's got to be the right time. And our goal as management and board members is to maximize the return. And and most of the individuals, except for me on the team, have been here since day one. So this is an asset we want to take to the end. And I think there's always discussions happening with every company, but our goal is to get these two out, execute. And if something happens over the next year and it rewards our shareholders and they vote and according to something that would happen, sure. But right now, no. So.
Okay. And we have a couple questions on batteries, and I'm not sure, I'm personally, I'm not qualified to speak on this. I don't know.
Not me. But yeah, what's the question? Which one is it here?
So there's two. So for most common batteries, which I guess in EVs are NMC and LFP in China, but they're asking about manufacturing costs in lithium and how rising prices, if that will slow down EV adoption. And
I mean, a little bit more technical for me, and I think whoever's at the end of the presentation, email me the questions or give me a call. Let's chat, and I can help learn, get the answers to these questions. I can maybe help learn myself to see what angle you're looking at here for the percentage of manufacturing costs. Increasing battery metal prices will raise the cost of batteries. I think I don't want to answer those questions. I don't know, but I can always get the answer for you. But give me a call.
Yeah, likewise. I'm not sure how much lithium prices impact the overall cost of a car. Or at least not even the cost, but like the selling price of a car. But I will say if there's anything we've learned from this latest cycle, it's that end users, EV automakers, are willing to pay these premium high prices.
Yeah, and I would even say I agree, and that when you first bought a Tesla a number of years ago, you couldn't get one, and you're paying a premium, and they've all come down significantly. And if they go up a little bit, we're still going to chase them because. I have a Dodge 3500 mega cab that I don't drive because it's so much diesel in the bloody thing. So good question, but we'll find out and give me a call or email me at the end anytime you want.
That's another good point. Sorry.
There's a couple questions. I like answering the elephant in the room question. Sometimes people ask what the water rights are. I mean, my usual answer to that is, and again, these are real answers. We are in continued discussions for opportunity for some water rights. We have engaged one of the top water rights lawyers, attorney in Nevada, to help us close or pursue on those angles. And look at all the Marley, the the bigger elephant in the room, who's sitting right next to us and controls about 22,000 acre-feet of water, and they've only been using 8,000 acre-feet over the last 60 years. There's 14,000 that's there, and it's maybe there's an opportunity at some point to work with them, and because you can't hoard water rights in Nevada. If you have them, you have to either use them or allow someone else to use them. So there's opportunity. We're 4 or 5 years away from production. I'm not concerned about that. A lot of people are, but again, it'll come. I have a very strong belief it's going to come.
Right on. And yeah, I'll just mention to listeners who are familiar with the water rights in Nevada that it was only about a year ago that Cyprus secured their water rights from a third party.
Yeah.
So,
and that was after their PFS was completed. So yeah, good comment, Kobe.
Right. Okay, so some more questions here. So you've been with the Noram for a relatively short while, but looking back, knowing what you know now, would you have done anything differently?
Well, you look at the management team that still exists today and has been there since day one. If you look at what they've done, you have a company that is nearly 8-9 years old. Before I joined, they, first of all, kept the company and the structure intact for many, many years. They stuck to it. They didn't dilute the company. They completed the first resource on lithium clays in Nevada. They completed 5 models. They raised the money and they completed a PEA all before the day that I even showed up. So, I mean, for me, watching what they've done and their dedication and their level of just sticking to it, you don't see that in these little resource companies ever. And I mean, they were struggling at market cap of $2 to $7 million for years, and then they were in the right place at the right time. So I think they've done an exceptional job, and now we have the opportunity to just take it from where they are and keep going. So I wouldn't change what they did. Because I think they put themselves in a really good position. Just the market's a little wonky right now, but yeah.
Mm-hmm. What about in terms of what you would have done differently since you started? Granted that it's only been a short period of time.
Oh, what I would have done differently personally from at this point? No, I think we got a strong team inside at Noram, and we try to work as close as we can to get and meet. See, we're not over promising. We told everybody by the end of the year we'll have a PFS. We're going to deliver. So we're not telling the market something and not completing it. The financing was that I brought in March, April, was the right thing to do. I believe it kept the structure intact, no warrant, no overhang, had a premium, brought in a solid group. So I think that was a really good thing that we would have done. We do need more institutional ownership, and I think that's going to come when we're going to start reaching out to get the retail side behind us. And really, we've been fighting a horrible market except for June 15th to August 15th when the market had a little run, but now it's coming back down. So, no, I think I'm good at what we've done, and we're about to launch one of the most aggressive marketing campaigns and strategic rollouts, noting we got 2 of our biggest catalysts, and the market needs to hear about it. And I keep seeing people not even ever have heard of our story, and it boggles my mind. But like I was at Beaver Creek last week in Denver, and I talked to a couple of senior groups out of the U.S., and they're like, heard of Standard, heard of Lithium Americas, what's Noram? So that's good. I like when people don't understand, because it's a good opportunity to reach out and broaden the shareholder depth and get our stock going.
Yep. I mean, that's when marketing efforts will pay off the most, right? When no one knows your story. So,
yeah.
With that, I think we'll have one more question here, and it's a simple one, and you've already touched on it, but let's reiterate. So what are the next key catalysts that, in your view, will re-rate your stock?
So I mentioned them already, but I'll mention them again, and why I think they're important. The resource update will be our 6th. It will highlight the success of our drill program, which is good. In other words, money well spent. It's going to, what I believe when done, when the technical guys actually send us the final numbers, it's going to take and increase, I believe, significantly are measured and indicated. And those are the only tons that count. And those tons I hope to have in a nice new presentation when completed, and showing the market and some of these other groups that we have probably one of the best or near best sedimentary clay deposits in the US that's done and ready for the next stage. So that'll be key. And then the PFS, again, that's another big one. And that's going to, play catch up to Cyprus, our neighbor, and really show that we're really kind of at the same level. They're further down the definitive side. Huge catalyst, and really just getting on the road and telling everybody that look at the metrics, look at the numbers, look at the resource, look at the grade of the resource, the amount of tons, where we're located, and you're quickly going to realize this 50 cents isn't going to last long. Again, do your due diligence. That's why I give my phone number. Phone me Saturday morning for coffee. I don't care. Let's talk about it and figure out what you don't like, and I'll help you get through it or learn a little bit and take that to the next level to our management team and our board of directors.
Great. Well, that was a great place to end it. So thank you, Peter. It's a pleasure hosting you as always. And
thanks, Kobe.
Of course. And to our viewers, if you want to learn our thoughts on Noram Lithium, as well as other companies that we watch or cover, we do publish all of our research on our website, and it is free of charge. So that's redcloudresearch.com. A reminder that our next webinar will take place on Monday at 2 p.m. Eastern, 11 a.m. Pacific, when Dave Talbot will be sitting down with Empress Royalty. Again, that's Monday, September 26th at 2 p.m. Eastern, 11 a.m. Pacific. Thanks for tuning in. Have a great day.
Thanks, Kobe. Have an awesome weekend. Take care, everybody. Thanks for taking the time.
Cheers.